Hey guys, it's that Dividend guy coming at you with another stock market news update. So today we're talking about Clorox stock, just like yesterday we were talking about Amazon and the impact that the pandemic had on their earnings. So if you guys didn't watch the video yesterday, Amazon missed earnings expectations and the stock sunk over $300 a share, which lost Jeff Bezos, according to the stock drop, about 15 to 16 billion dollars due to the price fluctuation in the stock. So, what's happening with these companies that benefited greatly from the pandemic is they're, of course, missing earnings expectations because they're not getting the sales that they did when the pandemic was happening. Amazon makes sense because people weren't leaving their houses. People were literally sitting in their homes doing mass orders from Amazon, and that's not something that can be replicated now that the vaccine is out. So I think you're going to be seeing a lot of red when it comes to companies that were greatly benefiting from the pandemic now that the vaccine is out. Um, they're just not going to be able to replicate those sales or those numbers. And one of those companies that really did benefit, of course, anytime there's going to be, flu season, anytime there's a cleaning products are needed, you're going to see a massive spike in sales for Clorox. But the issue was people were buying Clorox products, just there was none in stock. Literally, they were all gone. You couldn't even find a thing of Clorox wipes. People were hoarding them, thinking it was the end of the world. When that type of thing happens, when there's mass panic, people get a little crazy, and of course, Clorox sales because of that fear, just sales went through the roof, right? And so the problem that you're having with stocks that benefited from the pandemic is now that the same companies are going to be reporting less earnings simply because there's no pandemic. People are still, of course, buying Clorox products, but they're not going to be buying as aggressively. So there's going to be Clorox stuff on the shelf, which hadn't been normal for a while. So today, um, we saw a 19, almost $20 drop, an 11, almost 11% drop in Clorox stock, just like we saw with Amazon, because Clorox directly benefited from that fear. And the thing is, it's crappy because Clorox had great earnings. Clorox still made a lot of money, but the problem is, in Wall Street's eyes, they didn't match the pandemic's numbers, which I wouldn't expect them to, but Wall Street did. So now they're reporting a lower than expected earnings for this quarter, and now they're getting destroyed. I think this is very unjustified, but it's how it works. Once you have a record high number, people expect you to keep that up. But the problem is, they didn't get there organically, they got there out of fear. And so, companies that directly benefited from the pandemic, of course, had all time high earnings, but you can't expect the companies to do that. And this is where smaller investors like us can really take advantage because the 52-week high for Clorox is $239, so about 240 bucks. Germ was getting like an $80 drop from the 52-week high because they missed earnings. So we can take advantage as smaller investors. I'm not, of course, not going to be buying Clorox. I switched it out for Procter and Gamble, but this is a golden opportunity. And if you're able to identify the fact that, of course, there's nothing wrong with Clorox, that nothing changed. The management's the same, the product line's still phenomenal. People are still buying this product. It's simply because it's kind of an outlier reason, which is exactly why you'd want to buy the stock. If nothing changed, if the fundamentals didn't change, there wasn't a dividend cut, it's simply because they didn't get the same numbers that they did during the pandemic, and I wouldn't expect them to. So this is a golden opportunity for anybody who's looking to buy Clorox stock and or Amazon. Honestly, they dropped 350 bucks a share yesterday. Clorox dropped nearly $20 in a day. That's a flash crash. Clorox will come back. They're still making great numbers. They're still paying a great dividend. The management knows what they're doing. The management obviously saw this coming. Anybody with a brain would see that Clorox is not going to get the same numbers. So $20 drop in a single day for a quality dividend payer, nearly dividend king status for Clorox. It's a good day to be buying it. It's a very, very red day for Clorox investors, but if you already own a big position, this is definitely a buy day. So let me know what you guys think is going to be happening with some other stocks. I mean, I know there's a lot of consumer staple stocks that really did benefit from the pandemic and the fear that was happening around the world. I don't expect these companies, whether it's Amazon, being online purchases, or Clorox being um, cleaning products, to replicate what they did during a state of fear. It's not applicable. So let me know what you guys think about Clorox stock. Of course, this is, in my opinion, this is definitely an overreaction by the market, but it's a great buying opportunity because there's nothing fundamentally changing about the company. It's just Wall Street's ticked that they didn't match numbers, but it's whatever. Hopefully this happens with Procter and Gamble too. But with that being said, guys, thank you so much for watching. Let me know if you guys plan on buying Clorox stock. I hope you do because this is a great opportunity. If I still had it on my watch list, I definitely would be purchasing it. But I saw an article that did the math for me. This is the stock price of Clorox in 2000. So the past 20 years of growth on Clorox just got cut off simply because they missed earnings expectations. So this is definitely a great buy. I think Clorox, of course, will bounce back. I'm not super worried about it. But like I said, let me know if you guys are planning on buying Clorox stock, and what other companies do you think are going to be affected by, the pandemic highs. This is kind of an inverse. Usually, stocks get punished because, like this anyway, because there was a dividend cut, or because there was a change in management or philosophy in the company. Fundamentals changed. This is literally just a missed earnings, and it's an overreaction by the market. So thank you guys so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification so you don't miss any updates. I try to post 2 videos every single day. I at least post a Robinhood portfolio update every single day. So if you guys want to see content every day, make sure you hit that subscribe button. Thank you so much for watching, and I'll see you guys tomorrow with another double upload. Take care.